What is the real cost of owning revenue property in Alberta? Hello, Alberta real estate investors. I'm Lisa Hamlick with Citysearch Rental Network. Every week, we speak with seasoned investors and brand new prospective owners who are excited about the idea of owning a revenue property. And while real estate can be a strong long term investment, I want to walk you through the true costs of ownership in Alberta. Understanding these costs up front gives you some clarity. It helps you make smarter decisions and ultimately protects your return on investment. We group the major expenses into five key categories. Let's go through them. Firstly, mortgage payments. This one is quite straightforward. Your mortgage is usually your largest monthly expense. Depending on your investment strategy, you may choose to lock in a rate for stability or remain variable for flexibility. Either way, this is the easiest category to forecast. Property insurance. Insurance costs have risen dramatically in Alberta. On average, residential property insurance increased, say, 30% in 2025, and early indicators suggest another increase is likely in 2026. This is not something you can control, but it is something you must budget for. If you own a rental property, you must carry rented dwelling insurance and have a proper landlord policy. This protects you, your property, and your liability exposure. Next, you have HOA and condominium contributions. If your revenue property is part of a condominium or homeowners association, expect annual increases. Operating budgets generally rise year over year, and special assessments do happen, sometimes unexpectedly. When they do, it can be a big hit. These costs are non negotiable. If the condo board levies a special assessment, owners must pay for it. And many of these assessments today relate to things like insurance shortfalls, building envelope work, aging infrastructure, or mechanical system replacements. Next, property tax, hard to avoid. Property taxes are another major cost that continues to trend upwards. For 2026, we expect increases across most municipalities in Alberta, although the exact amount is property specific. Taxes rarely go down, at least from our experience. They are a predictable, ongoing part of the investment equation. Now, the last category, which is super important, capital improvements and repairs. This is the area many investors underestimate. Capital improvements include things like new carpet, fresh paint, replacing appliances, updating fixtures, flooring replacements, and like just renovations to bring the property back to a rentable condition. These expenses have increased significantly over the years. Many trades and materials are double from what they were, say, 7 years ago. Now, repairs also have risen because labor rates, insurance, fuel, supplies, and the overhead for the vendors have increased. So that cost typically would filter down through to a property owner. The hard reality is that expenses are rising faster than rents. We all hope that rising expenses will be offset by rent increases, but that isn't happening at the same pace. Rents have softened in Alberta, particularly in Calgary. So what do you do as an investor? Now, we recommend that every owner complete a risk assessment analysis. Firstly, property type matters. Not all revenue properties perform equally. What we consistently see, single family homes tend to outperform in the long term. The typical tenant profile for a single family detached home is a family. They stay longer as, the kids are in school. Once they're in, they get comfortable. They know their neighbors and so on. And they treat the home with more stability. So vacancy and turnover is significantly lower. Townhouses and apartment condo experience much higher turnover and often have higher ongoing costs tied to the condominium corporation. Location is critical. Properties in suburban, family oriented communities consistently show the best long term performance. Now, age of the property matters more than ever. Newer construction means lower maintenance and warranty coverage. Certainly, over the first, 5 or 10 years. Older properties require more capital, more repairs, more ongoing upkeep. For new investors entering in today's market, our general advice is clear. A newer single family home in the suburbs remains the strongest long term investment profile. Now, we can help you as an investor. If you'd like support evaluating a current property, for instance, or if you're considering buying one, we're happy to provide a risk assessment based on years of empirical data from the thousands of doors we manage and the thousands of leases that we have set up. So jump on our website at citysearchcalgary.com or reach out directly. Being a successful real estate investor today is about being informed and strategic, not just about buying any property and just hope it performs. I'm Lisa Hamlick with Citysearch Rental Network. Thanks for watching, and please connect with us if we can guide your investment decisions. We wish you financial success.